region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Friday, December 12th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn down 3/4 at 445 3/4. January soybeans were down 9 at 1084 1/2. And March Chicago wheat was down 3 1/4 at 530 1/4. Excuse me. This morning we had a number of export sales announcements. First off, 132,000 metric tons of soybeans sold to China for 25. Also, in addition to that, 250,000 metric tons of corn to unknown destinations. That was for 25. 104,328 meal to Mexico. Out of that quantity, 93,895 was for 25, with the balance 10,433 going for 26. Good morning, fellas. We'll put a wrap on this week here. Weather looks pretty good in South America. They got systems rolling through. Precipitation looks pretty good, so nothing real threatening so far on that front. And it feels like we're just kind of grinding into holiday markets. So I guess, Dustin, maybe give us a few thoughts here as we wrap up the week. We'll throw around the room.
Yeah. Well, it's that time of year where it's feels like liquidity drops off, and it could be about position squaring into the new year. I think the biggest changes over the last couple of days that I think fundamentally changed things would be the currency, right? The dollar is getting a lot of weakness following the Fed's decision to not only cut rates, which was expected, but also start asset purchases. And it's just a more dovish language than they were expecting. So you just go through the last 10, 15 years of what happens when the dollar index falls versus when it rises, of where our flat price could be. I think that's our best chance to get favorable markets again, is we can get a weak dollar. So continuing to watch currency moves. We go into the new year, how much cash needs to be raised, how much corn's been waiting to be sold. And then what are these payments per acre when we find that number out. I think a lot of clarity comes after the first couple of weeks of the year, especially when we get through that Jan report. So I think main thing is make sure hedges are in place prior to that report. That's my goal. Yeah, I obviously hedge a certain amount by now, but make sure a floor exists.
Right. Dustin, what's the market trading right now in your opinion for yields going into January?
I certainly don't think high 180s for corn. I think most people expect the Iowa number to drop. I mean, they better drop, right? Based on what I think the market's trading. Maybe a 183, 182. I don't know. We had another good export sales this morning today. So exports, we have strong demand at these prices, and that can hold prices up, and it can even make prices rally when we don't have a lot of flow yet. But as soon as you get to that point where it looks clear that we will have that 2 billion bushel carryout, and demand has gotten the coverage that they need to get in the cash market, there's going to be a lot of bushels that need to probably move before the end of this September 1, 2026. And that's probably my fear, is what's happened the last 3 years. Go back and look at the September contracts the last 3 years. The very worst time to sell corn was at the end of that marketing year in August for the September contract. Why? Maybe it's the record amount of steel storage that we built, or the modern way of kind of kicking the can down the road at the delivery point. Rolling basis only contracts, DP. If you force all those bushels to sell at the very last moment of that marketing year, you may be forcing too many of those bushels to make that decision all at once. And that's why I want to try to avoid this year in particular.
I'd say one other thing caught my eye this morning, and we hadn't talked about it in a while, but you look at like river levels down by Memphis, or they just breached, low stage, short by 8 feet there. So we hadn't talked about that quite a bit, but I guess with this, export program and everything, it certainly bears keeping an eye on. And you've talked a lot about it, in the past once we've started to see lower and lower levels down there.
Yeah, it just raises your cost of transportation. That's a barrier to business, so you're going to see less flow, less movement, and we're left with too large of a pile of corn if that's the case in the end.
Ben, should be an interesting close in beans today. I think everybody's got their eye open pretty quick on certainly on the Jan contract, weaker overnight, off the lows by a little bit, but still how we go home today could be a telltale sign here.
Yeah, there's you make new lows, you typically think you're going to force some people out. I think there's some people probing. There's a lot of open interest in puts and soybeans. The $11 strike has double any other strike in open interest. Unsubstantiated belief that China is the big put seller. It's just kind of a methodical thing that they do. And if you look at relative and open interest, 1070s 14,000, 1080s 15,000, 1090s 14,000, $11 24,000. Those are all in the puts. So there's some pretty big numbers in there for the Jan contract. But when you combine that with the $11 calls, there's 36,000 open interest. I kind of think beans probably settle into some sort of range here for a little bit until we can see what weather means. Obviously it looks okay right now in Brazil. Argentina's questionable, the southern part of South America. So all that option interest kind of will start to make a difference here over the next week. And again, I'm not Karnak, the magician, pulling out a card, but looks to me like $11 might have some interest to just go there and lock this thing up, especially with Dustin mentioned low holiday volume. So we'll see. We said it before. Most of the time, the people holding short positions, the majority of them are going to be professional traders, and they're managing them. Long traders are probably people that are a little bit more limited in risk. So you put quite a few puts here now in the money in Jan beans. So we'll see how it plays out. With a lot of open interest in the $11 strike.
Sure. What's your wheat opinion right now, Ben?
Range bound trade. It's kind of stuck between really doing some nice export business versus increasing global supplies. Wheat's going to need a real weather issue somewhere to get fired up. There's pretty good belief that wheat acres could be down quite a bit. I'm not exactly sure when we find that out, January maybe. But wheat is a nothing burger trade. Spreads in wheat are tightening up, and I think that puts that kind of dug in short who's willing to collect the toll on wheat, maybe a little bit less enticing for them because spreads are a lot tighter than we've seen maybe for a lot of the last year or two. So it could make wheat a little bit less negative if people start to exit some of those shorts. We've talked about it before. Wheat spreads, when they're as wide as they had been trading, you're talking about 15% ROI on the year. That's pretty good on anyone's standards. And that trade starts to look less appealing. So
well, very good. I've got a couple minutes here. We'll roll over into livestock there, right? Cash has really been the king this week for cattle. We got these hogs going off the board here today. So why don't you put a bow on the week for us here, buddy?
Yeah, no, it's been a great week. I mean, we gapped higher yesterday and just really didn't look back. I mean, it was a really strong close, and the cash market is following. We got 230 trade in the South. It's up $5 to $6 from the previous week. The North looks like it's going to be around 227. So just really good cash news. I mean, I think there's just, a lot of the fear has just been kind of wiped out of the market for right now, and everybody's back to clicking their heels. So we do see weather moderate next week a little bit. We baked in a lot of really good news for now. So at least at this point, obviously the technical momentum is good. The fundamentals still seem really strong. Supplies are still really tight. So, I mean, we're just kind of working our way through this at this point, but it looks like the market's going back up and up. And, obviously it's going to cause, I think, a lot more friendly perspective here as we get into next week as well. But like I said, we baked a lot of really good news in. I think we have to see this translated into next week to kind of keep the party rolling here. On the hog side of things, still following live cattle, as it were. I mean, we did see some pretty good action in cash. Cash was up $1.64 at 71.69. Bellies were up 337, carcass up 157. So we're seeing some of the fundamentals start to improve, but there's definitely a little bit of a hint of macro trade going on, especially just with the Fed cutting interest rates again, more interest rates likely to follow. So I think we are seeing a little bit of a boost just from some of those kind of asset class kind of following funds at this point. It's more speculation in this case, but I would say it's pretty safe to assume that there's a little bit more comfortability on the long side of the market here in pretty much both places. So we'll see if that continues. Otherwise, like I said, you baked a lot of good news into the market. You had a nice rally yesterday. I think we're going to draw out some pretty good producer hedging, especially in the summer contract months in the hogs. June, July, over $1 now. So I think we're going to start to see, a decent chunk of hedging here, just over the next several days.
Beautiful. Appreciate the update there, buddy. And that has drawn us to the close. And with that, it's Friday. Brian, Fun Fact Friday. What do you got for us, buddy?
Hi, thanks, Dan. Happy Friday, everybody. Since we are in the midst of the holiday season, I thought it'd be kind of fun to look at some holiday fun facts to share at your next party, possibly. We'll kick it off in Iceland. They have 13 Santa Clauses called the Yule Lads. Creepy little trolls who leave rotting potatoes in shoes of naughty children. Anyone say therapy?
That's great.
Yeah, we'll move on to a local one here. In 1979, Ben and I were probably just finishing up high school. A Chicago radio station played Grandma Got Run Over by a Reindeer on loop for 8 hours straight.
Oh.
Listeners were calling and screaming to please stop the madness. So I thought that was pretty good. Let's go here. A fruitcake is technically immortal. There is a 140-year-old fruitcake preserved in Antarctica that scientists say is still edible.
What?
I mean, I try it. That
Right? I was going to say, any takers?
Yeah, let's fly up there.
And lastly, this is right up Ryland's alley. The world's largest office party was thrown by a Saudi prince in 2012. 25,000 employees,
Jeez.
3 tons of shrimp cocktail,
Jeez.
and a private Coldplay concert.
Well, I bet that smelled great.
We have pictures of it. So, Jack?
Okay. Why did it make me look so fat?
Ryland hanging out with Coldplay.
Ryland Coldplay.
Wow.
It's disturbing.
Happy Friday, everybody.
Jack and Brian are still undefeated. That is amazing. Oh, thanks, Bri. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Hope everybody has a great weekend, and we look forward to talking to you again next week.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com. Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.